This is the Real Estate Guide to Success video series. I'm Vance Poindexter. Again, I'm here with Ronnie Adams.
Yes.
Today we're going to talk about 1031 exchanges. Might seem a little bit obscure. You may never heard about it before, but we actually got an email from one of our readers on the website, Riku, who asked about how do I take advantage of 1031 exchanges? Has Ronnie ever done it before? And what's the deal behind it? So I'll turn it over to you.
1031 exchange. I responded to Riku to let him know that, or her, I'm not sure, but to let them know that I've never done it. But what it is the IRS allows you to defer your capital gains tax from property sale to property sale if you go through a 1031 exchange.
Okay.
So it's almost like taking the profit that you would have made on a property that you sold. You're putting it into the exchange. You're using that profit in a certain amount of time that I'm not sure if it even changes from state to state, that you have to purchase another property with that profit. And you are deferring the taxes until you sell that second property. Now, if you were to use that, once you sold that property and the profit that you made would have been bigger now, you could put that into the exchange again and do it again.
Oh, so you can roll it forward even more.
Yeah. You can do it as long as you wanted to do it. But at some point, you're going to stop. Then all those taxes are due at that time.
So you mentioned to me that kind of like the best time to do something like this would probably be towards the end of the year.
Towards the end of the year. Because what we're looking at is if you were to sell a property, and we have until the 31st of December, if you sold it in, say, the 15th of December, then you're going to pay taxes on that
in that year.
In that year for that profit. If you were able to defer it to the following year, now remember, the only way that you can defer it is if you have another property ready to go. So it's not like you're going to purchase a property, say December 1st, and you're like, okay, I'm going to use the exchange so I can defer my taxes. But you have to have another property ready to go for that exchange to actually work. Now, here's the only thing that, we have to look at too. The exchange is going to give you a certain amount of time to purchase another property. So whether it would be, and I'm not sure if it changes from state to state, but New Jersey, I think, is about 60 to 90 days, somewhere around there. But if I were to purchase the property, or say I sold the property December 1st, and I was still within the time period of what the exchange allows me to purchase another property, and the year passes at that time, then they may allow you to, you can, it's still deferred. But
I thought that you had to do the sale of the property and the purchase of the next property in the same transaction.
No, it's not in the same transaction. You can sell the property, but you have a certain amount of time to use that profit to purchase another property. So it's not like that you would have to sell it and buy it the same day. Or within 2 days. You're going to get a certain amount of time to use that money, but you have to, now, if you don't use it within the allotted time, then they're going to make you pay the taxes for that.
So, just to let the viewers understand, it's not you that's managing, keeping track of, monitoring how much money is being exchanged, whether it's being transferred or not. You have to have I think what's called a qualified intermediary or a lawyer. To handle that for you, right?
Yeah. So you would have to have someone else who's going to set the exchange up. And it's almost like, even if you have a will or something, you have somebody else set it up. So, and even if, let's just say they allowed you to do it, which they don't, you don't want, because money's being transferred, you want to make sure that someone else is doing it, make sure they did it right. So that's what would end up having to happen.
Well, another thing is to make sure that, it might cost you
a little bit more,
couple hundred dollars to pay a lawyer to do that. How much are you going to save deferring taxes? So you might not want to do it based on how much you're going to have to pay out, or how much you're going to have
But
to
remember too, that you're not going to do this because I am making $5,000 on the profit or the capital gains of the selling of a property. You would really have to be making 30 grand. You know, you got to have a significant amount.
Okay.
Because there's no sense in setting it up for one property. And to be perfectly honest, you're not going to set it up unless you have a couple properties that you're looking at. You know, so I'm looking to defer taxes for a number of properties.
Right.
And then here's the real beauty once you start getting into it. Now, again, I never did it because I didn't have enough that I knew that I was going to keep doing.
Sure.
But if, let's say at the end of the year, I made, let's say 200 grand, because I did 4 or 5 properties that year, and I was able to defer it to the following year. So now the following year, I know that I'm 200,000 in capital gains that I'm gonna have to pay 12 months later.
Right.
Now that capital gains that I'm going to pay is going to be percentage on whatever your taxable income is. So it may be 30% or whatever it may be. But remember that you have 12 months now to try to
work
offset
that down,
and work that down.
Yeah.
So that's what you're going to be looking at doing, is that I want my exchange to end the beginning of the following year.
Gotcha.
Okay, I already know that I'm not going to do this anymore, but I want to bring this out to the beginning of the following year so that I can do something else to be able to offset how much I have to pay in taxes.
So you may not have been able to offset it in the current year.
Yes.
So, and able to kind of, whittle that down over a period of time and push it forward, use 1031 exchange,
Yes.
push forward, reduce that taxes, where you might be able to do it and plan for it in the next year.
Yes, most definitely. And we also want everyone to know out there that we are giving advice. You still need to go to your lawyer.
You gotta have a lawyer. Make sure. This is what has worked for Ronnie. This is from his experience. He hadn't done this one, but he researched it and he understands how it works. We encourage everybody, have a second opinion. I mean, you don't do anything without having enough background and experience and knowledge to understand how things work.
Yeah, because state to state, it may change a little.
Right.
So laws change a little from state to state. So you just want to check into everything to make sure. But the basis of what the 1031 is really used for is the same everywhere.
All right. Thank you, Riku. We appreciate it. And we encourage everybody to send us emails, post comments on the videos, post comments on our podcast, go to our Facebook page, whatever. We'll get back to you, and we'll also maybe feature you in the next video.
Yes, definitely.
Talk to you later.
All right.